Chapter 3 Profitability Part 2. Last time, you learned the relationship of basic factor and you also learned the profit and loss statement. And today, you will learn about the details of these basic profit factors and performance measures. So let's start from the basic profit factors. In the last class, you learned this profit and loss statement, and there are three important basic profit factors described in the profit and loss statement. And these are net sales, cost of merchandise sold, operating expenses. And today you will learn a little bit more details about these components. So let's start from the net sales. We discussed the net sales last time, and now I want to tell you one more important concept of the sales, which is called as a gross sales. When you talk about the net sale, that means that after you deduct the customer returns. But the gross sales, that means that that's even including the customer returns. So gross sales, the formula is gonna be net sales plus customer returns. And net sales is gonna be gross sales minus customer returns. When you think about customer returns, at the end, when you calculate the profit, that's not going to be included as part of your sales or profit. So you have to deduct this amount to calculate the accurate amount of the sales. So net sales means that. So that is going to be all the sales minus customer returns. And the other one, the gross sale, is going to be net sales and plus customer returns. So all the operating income, sales volume, and sales productivity all refer to net sales, and to arrive at these net sales, customer returns need to be subtracted from the gross sales. So when you think about the gross sale, that means that the total of prices charged to customers for all merchandise and services. So that's including all the prices charged to the customer before they return the stock. So there's gonna be all the sales including the customer returns. So if you know this concept, there are like a few more things that you can calculate, and one of those is gonna be customer return percentage. So let's look at the next slide. So if you want to calculate the customer return percentage, what you can do, if you know the dollar amount of the customer returns and dollar amount of the gross sale, you can calculate it. So the formula for the customer return percentage is gonna be dollar customer returns divided by dollar gross sales. And here is the really different thing that we learned the last time. I said when you calculate the other part, the percentage of other part in the profit and loss statement, you have to use the net sales as the denominator, but only this. Customer returns, when you calculate the customer return percentage, you need to use the gross sales as a denominator. So that will be the dollar amount of the customer returns divided by dollar amount of the gross sale. And also, if you know the dollar amount of the net sales and gross sales percentage complement, you can calculate the gross sales backward. So here is the hint in this case. So gross sales percentage complement formula is gonna be gross sales percent minus customer returns percent. And in this case, gross sales is considered as 100%. And your customer returns may be like 5%, that case, there will be 100 minus 5%, so your gross sales percentage complement is gonna be 95%. So you will put the dollar amount of the net sales and divide it by the gross sale percentage complement. So now you know. So if you know the net sale dollar amount, gross sale percentage complement, now you know how you can calculate the gross sales backward, and also how to calculate the customer return percentage. So let's look at the example 3.13. And in this case, you have three components. So it didn't include the details about the cost of merchandise sold and the bottom part of the profit and loss statement you learned the last time. But let's look at this first. And then I'll show you the next on the next slide, you can see more details about the profit and loss statement. And this component, you have gross sales, customer returns, and net sales. And if you know this, what you can do, you can calculate customer returns percentage and net sales dollar amount. So let's look at that customer returns. How you can calculate these customer returns? That will be your dollar amount of the customer returns divided by which one? Net sales or gross sales? That will be gross sales. So that is this 8.65%. Let's look at this. This 8.65% was calculated by total customer return amount 50,452 divided by gross sale dollar amount. So 50,452 divided by 583,260. And in this example, you can also calculate the dollar amount of the net sales. If you remember the formula, it was gross sales minus customer returns. So that will be 583,260 minus 50,452. Then you will get 532,808. You can go ahead and practice this. Always, I really want you to have this calculator. I mean, you must have the calculator right next to you when you do these practice, problems. And it's always important for you to really do it and do it with me. So go ahead and try. So try to do it like a 50,452 and divide it by the 583,260, and you will get 0.0865, and then you can get this 8.65. And also try that, gross sale dollar amount minus customer returns, and see what number you got. But now you understand this concept, the difference between the gross sales and the net sales. And now you also know how to calculate the customer returns percentage. So let's look at the next slide now. Oh, and in this case, that if you remember the last time, for the bottom part, because I'll show you on the next slide, I'll show you all these profit and loss statements. And when you calculate all other percentage, your net sales will be considered as 100%. So let's look at the next slide here. So we keep the same part at the top there, and then this one even include the cost of merchandise sold, gross margin, operating expenses, and profit. And this net sales, cost of merchandise sold, gross margin, operating expenses, profit, you learned this last time. And we just talk about this top part. And now, based on this information, you know how to calculate other number based on the other component. So let's start from the first one. So your net sales, this 532,808 was calculated by gross sales minus customer return. And if you remember the next one that you can get, your gross margin is gonna be your net sales minus your cost of merchandise sold, and you will get this 275,195. And if you know the gross margin and operating expenses, you can calculate the profit. That is gross margin minus operating expenses, and you can get this profit. And here, now you have the figure with the percentage, right? So how to calculate this? Just for the customer return, as I mentioned in the previous slide, this 8.65 can be calculated based on this formula on the top. So customer returns percentage will be dollar customer returns divided by dollar gross sale. And you will get this 0.0865, and that will be 8.65%. However, for the other component, such as cost of merchandise sold, gross margin, or operating expenses and profit, what you have to do, put the number for this dollar amount of a cost of merchandise sold and divide it by which one? Gross sales or net sales? Divided by net sales. Then you can get this 48.35. How about the gross margin percentage? That is same. So you will put 275,000 and 195 at the top, and you will divide it by net sales. And you will get this 51.65%. Same for the operating expenses and profit. So profit is gonna be which one divided by which one? You think about it. Look at this number. Yeah, dollar amount of the profit is 23,325 and divided by net sales. So once again, this customer returns is gonna be only one for the percentage. You will divide that number, this customer returns dollar amount, by gross sales. But other ones, you will divide it by net sales. Okay, and now let's talk about the cost of merchandise. Total cost of merchandise sold is influenced by many different factors, and that can include billed cost of merchandise, transportation, cash discount, alteration, or workroom cost. Because any cost involved to purchase the merchandise, that's called as a cost of merchandise sold. So first, of course, to buy the product, bill the cost of merchandise, actual price for the merchandise, the cost. And transportation, oftentimes retailer will pay, but you also have to check that out, but maybe if that's part of it, that's gonna be the cost involved in the cost of merchandise sold. And cash discount, you can maybe get the quantity discount, or you can also get some kind of cash discount if you pay early or on time. Then there will be some kind of discount that you can get. Then they will influence the cost of merchandise sold. And some types of alteration or workroom costs relate to the merchandise. Also, that's gonna influence the cost of merchandise sold. And these factors must be controlled in order to maintain or improve profit. So think about this profit and loss statement you learn. And cost of merchandise sold, if you have more of this number, actual profit will be reduced, right? So it's gonna be better to control and to get the better cost of merchandise sold to make more profit. So that's what I'm talking about, because the main purpose of the business is to make profit, to pay your employees, and to also pay the rent and also buy more product. So you have to make a profit, right? And to run the businesses. So you really have to think about how you can maintain or improve the profit. And one of the way that you can control this cost of merchandise sold. And more details about this cost of merchandise sold will be covered in next chapter, chapter 4, and also chapter 7. Now let's look at the operating expenses. So any expenses other than the cost of merchandise sold related to the business is gonna be the operating expenses. So to run the businesses, any cost involved other than the cost of merchandise sold is gonna be operating expenses. So these expenses include the cost of wages for selling and non-selling employees, management salaries, utilities, advertising, supplies, fixture, buyer's travel, and other. And also you can kind of categorize these expenses into different categories. So first one is gonna be the direct expenses. So these are the result of the operation of one specific department and would not occur if the department were eliminated. Such as, can you think about any direct expenses? So if the department is eliminated, you don't really have to pay your employees. So like a salary for the employee is gonna be the part of these direct expenses. And the second, indirect expenses is gonna be something benefit the store as a whole and would continue even if a particular department were discontinued. So such as the rent or insurance or store maintenance fee, or this kind of expenses can be considered as indirect expenses. And the other part, you can call this as a contribution or controllable margin. This is the amount left for you to check about your amount left. So after you deduct, subtract the direct expenses from your gross margin, this amount is gonna be called as a contribution or controllable margin. So the gross margin minus direct expenses. These are called as contribution or controllable margin. This is really important because you can kind of see how you can control the expenses for your company. So you also have to think about this concept as part of your operating expenses. All right, then expense control. You also have to think about, you also have to control your that cost of merchandise sold, but also the expenses. Because another one, this is gonna be the minus, right? It's gonna be deducted when you calculate your profit. So you have to think about how you can control your expenses, if possible, how to reduce these expenses. So what you have to do the expense control, you have to analyze the low gross margin areas, right? And control expenses while increasing productivity. So that's gonna increase your profit, right? And monitor and make adjustments as soon as factors appear to be slightly out of line. That also means that you also have to kind of see that where you can kind of reduce amount of the expenses. And retailers must carefully plan and control expenses. Of course, if you see that, once again, think about this profit and loss statement. That's gonna be minus out of your net sales, gross margin. So you have to, and to get the more profits, you have to kind of control these expenses, and if possible, how can you reduce this? You can think about that, because that's gonna be one of the way that you can increase your profits. Okay, so profit performance improvement. All the companies, they must produce a profit to stay in business, as I mentioned earlier. So because to run the business, you really have to make a profit. Then if you cannot make a profit, that means that keep having the minus, then you'll be out of business, if you don't really have profit. So to survive, to run the business, stay in a business, you have to produce a profit. And how can you improve this profit performance? There are a few different ways by analyzing certain things, and these include merchandise. So how you control the merchandise, also cost of merchandise sold, and assortment of the merchandise will be related to the profit performance, and visual presentation too, and human resources, so how many people you have and about your good managers and so on. Human resources will be related to your profit performance and how they well doing for selling and stuff, and reductions of customer return percent. Of course, that will influence your profit performance. You want to have low, right? It's better not to have, but then if that happens, it's gonna be better to have low customer return percent. And also, another profit improvement strategy is gonna be reduction in expenses. So already you learned in the previous slide, expenses is gonna be deducted from the gross margin when you calculate the profit. So it's better to have lower expenses to have more profit. So that's also one of the way that you can consider to make or to improve your profit performance. All right, and let's talk about the performance measures. It is really important for all the retailer business people to measure the productivity or efficiency of sales personnel and space and also the inventory. That means that you can kind of how much productivity happened depending on the sales personnel and space wise and based on the inventory. And this productivity is output produced compared with input expended. So first one that we can talk about the productivity is gonna be human resource productivity. So it can be measured by selling cost and sale per transaction and sales per employee hour and sales per full-time equivalent. So as you can see, you kind of calculate the productivity depending on how well your salesperson did, or depending on the full-time equivalent sales personnel and the selling cost. And the space productivity, that's gonna be measured the sales per square foot of selling space and sale per linear foot of shelf space. That means that how much productivity you can have from this specific area. of the store, and the space size, how much productivity that you can have. So you can kind of measure, you can kind of make a plan how much space you need it to make more productivity and so on. And also you can kind of calculate for the human resource productivity. You can kind of think about how many people you need and so on, can be calculated based on those. And more details. So each one you're like, oh, there are too much information, but we're gonna talk more about the details about the human resource productivity and space productivity in the next time. So you will learn how to calculate each concept, like how you can calculate the human resource productivity by selling cost. You will learn how to calculate those, and also space productivity too. So you can learn how to calculate all this, the productivity. So we can continue that in the next time for the chapter 3, part 3. And that's it for today.